Alright, hopefully you can hear me. So here's a recording I did on the computer early morning during the New York session. Just gonna try to kind of relive the moment. This was last week, so we are in the 29th week of the year, and this is from the 28th week. It is from, like I said, the New York session, early morning. And so that's a different type of characteristic that I had to face and keep in mind while trading. So you can see I'm going short here, and it's off the premise of that 9:32 a.m. fair value gap. It's kind of hard for me to see. It's a little blurry just because of the size of the screen. If I can increase this, that would be nice, but I can't. Anyways, I'm looking at the market structure on the dollar here, and that buy side liquidity looks pretty nice, but the position essentially just stopped me out. Just went up in there, mohawked into the consequent encroachment. So I wanted to see it go down into that 4-hour first presentation gap. That was the initial draw during the New York session, and so that was the whole premise off of the first few trades. You'll see that they were losing trades, just sort of disclosed that in advance. So nothing exciting, but I guess the star of the show is the risk management, which has been something that I've noticed in my trading has really kept me. It's been very helpful, and so on Friday, which is a day after this recording, I will go over that as soon as I get time. Honestly, I didn't manage risk that well, and while I did take a small, cut, I know exactly the catalyst as to why, so I'm going to be going over that when I get that out. I did sort of prolong this recording, or procrastinate putting this out, but you know what, put that aside. Anyways, so you can see next position stopped out. We did create those relative equal lows, and so what I've noticed, a characteristic of the New York AM session early morning is that on a 1 minute or sub 1 minute chart, there's a lot more of these relative equal lows created, and then they are ran later, like 5-10 minutes later. So I didn't want to face the retracement in the position, so I just exited early, and I'm pretty sure that one was at a loss, small loss, but I'm glad I got out early. Then I see that we respect that 15 or that 1 minute gap shaded in orange. Now right about here, I'm kind of just putting my feet in the waters, just trying to understand the order flow. And so I get in short here at the upper quadrant, trying to once again target that first presentation 4-hour fair value gap. So the idea was, I thought we were pretty likely to go back down into there. One more revisit would have been a great opportunity for a long, is what I was thinking. And so I wanted to get in there for the run going down into there. I thought I guess I was overstepping my boundaries, because I was trying to do more than what was required. I could have waited for it to go down there and avoided the headache of getting in, getting out. But it was a good session because I was still reading the tape, and in the moment, really there is a different sort of quote unquote stress that is taken on when trading. But recently, just with the sort of new approach that I've attained of the 15-second and 1 minute chart of managing my position, kind of like a stress-free, like getting those free looks is what I call them now, which is basically a break even or better. It makes reading price action, not eating, reading price action a lot easier. And it makes it a lot easier, especially within a trade. Anyways, so the time is now 9:26, so I'm sort of setting up for an early pre-opening bell run, and just asking for a little too much here. If I'm being honest, my thinking during this, and I learned something, that my targets were too much, and it was in the moment justified for me, once again, like I said, because of my stop. But I could have done a lot better this session and also on Friday's PM session had I just accepted smaller targets and kept my stop management the same. So basically what I'm saying is, in the moment when I'm, taking these trades, I am thinking to myself, okay, if I can, get 10 handles, 15 handles out of this rather than the 5, and I'm also able to manage my stop in a way where it's break even or better, then, or reverse that, scratch that. I'm thinking to myself, if I can get my stop to break even or better, and I'm able to get more than 5 handles out of this, then I know at the end of the day I could do that 50 times in one session and take all those trades break even and still pay commissions and, walk out a green day, technically, by the numbers. And it wouldn't affect me mentally because I'm unopposed to a trade that is stopped out at break even. I'm unaffected, essentially. So, especially when in this example the trades don't run to the targets, it's even less of a drain. But anyways, back to the 9:32 a.m. presentation fair value gap. Right here, I'm in long once more after getting stopped out break even, looking for that buy side, thinking that 9:30 candle, I think it is, basically the opening range gap high, or the opening range high, is going to be ran out. And now over here, this was a very interesting day because it started to face a lot of difficulty. It was just a lot of chop post session, and I'm glad I'm recording this a few days because I got a lot of time to think about this. But looking back, I have to give myself a pat on the back. I definitely cannot walk out, upset at myself, but I could have done better. If I'm just thinking out loud. And a lot of back and forth, like I said, but the main point I was trying to get at was the after I walked away from the session, there was actually a moment, and I think it's about here, right here, if the mouse doesn't move for a while, I took 5-10 minutes to just walk away and mentally reset, because I think that in that moment would have benefited me the most, and it definitely did, because then I got back in later. I walked away, came back 10 minutes later, and yeah. Sorry, I don't know what, that recording just made a noise. Anyways, what I was saying was, walked away for 10 minutes, quick break, came back, reevaluated, and saw that we had created 3 drives lower. So then I went long, and I targeted those highs, but didn't make the best decision, exited at break even though that would have been the greatest entry. Not the greatest, but it would have been a great entry right there. We went down, next candle, faced a little bit of heat. I think right here I was just fearful. I think after having had faced that difficult opening range session, I just wanted to sort of be certain that it was going to run. And after seeing the reaction, created another fair value gap, created 3 drives lower, ran the opening range low, traded also to that 4-hour first presentation gap, which, keep in mind, was after 10 a.m. So setting up the perfect 4-hour power of 3, set my limits to the opening range high, and you can see that eventually it went and ran that high. So stops at break even, I'm in a free look here now, and also the dollar is starting to reject at this point. So, what's the takeaway from today is that good risk management for me is probably my strong suit. Also, you can see I'm starting to trail my stop here, which it eventually does run out. But you know, the idea is that I was able to, you know, manage the emotions up to a certain amount, and I didn't throw the or shit the bed. Basically, I came back. That 10-minute break benefited me more than I really think it would have. And so yeah, I'm also keeping in mind I'm now just trying to keep the chart as clean as possible, and so that's why I'm removing the annotations, because I notice less is more in this situation. So